These mountain towns were once the dream: pristine views, ski-in chalets, and investment gold. But in 2024 and 2025, some dropped over 30% in value, condos crashed 22%, and one town literally burned to the ground. Nobody's talking about the real reason why. Before we dive in, hit subscribe, because every week we break down the global economic stories you're not supposed to ignore. On the surface, this looks like a simple housing correction. But dig deeper and you'll see a perfect storm: capital gains tax changes, interest rate chaos, climate anxiety, wildfire destruction, and a collapsing short-term rental economy. What you're about to hear isn't just about real estate, it's about the end of Canada's mountain town gold rush. Today, we're counting down 10 Canadian mountain towns where property values are in absolute freefall, from 22% condo crashes to towns literally burned to the ground. Homes that were supposed to be safe investments are now bleeding equity. Owners are panicking, buyers have vanished, and trust me, number one will change how you see the future of resort living in Canada. Why is this happening? 3 words: capital gains trauma. In June 2024, Canada increased the inclusion rate on non-primary residences from 1/2 to 2/3. Recreational property owners panicked, listings flooded the market, and buyers vanished overnight. Add in interest rate volatility, insurance nightmares from wildfires, and short-term rental crackdowns in major resort towns, and you've got a market in total collapse. But here's the twist: this isn't just economics. It's demographics collapsing, climate risk becoming uninsurable, and the realization that mountain paradise comes with a price tag nobody can afford anymore. Number 10. Nelson, BC. This artsy mountain haven is losing its shine, and fast. Tucked in the Kootenays, Nelson was once BC's hidden gem for affordable mountain living with historic charm and a thriving arts scene. But something shifted in 2025, and it's not pretty. The average sale price hit $647,837 in January 2025, down 14.84% compared to the year before. Sales activity surged 142.86% compared to last year, but that's not a good thing. That's desperation selling. Days on market dropped to 111 days, down 39.15%, meaning homes are moving faster but for significantly less money. Inventory jumped 17.92% to 204 homes available. Translation: panic. One local realtor said, "There's still demand to move here, but limited supply." Except now supply is growing and prices are dropping. You wanted the artist lifestyle in the mountains? Congratulations, you're now living like a starving artist with a mortgage you can't refinance. Picture this: you bought your mountain bungalow in 2022 thinking you'd made it. Now your neighbor just slashed their price by $50,000 for the 3rd time, and suddenly your investment is underwater. The galleries are charming, the coffee is fair trade, but your equity? Gone. Nelson isn't collapsing as dramatically as others on this list, but the warning signs are flashing red. When inventory rises and prices drop simultaneously in a desirable market, that's not a correction. That's the beginning of a slide. And in mountain towns, slides don't stop halfway down. The Kootenays were supposed to be the affordable alternative to Whistler and Canmore. Now they're becoming the affordable alternative to nowhere. Would you bet on Nelson bouncing back, or is this just the start? Drop your answer below. Number 9. Rossland, BC. This old mining-turned-ski town is stuck in a time warp, and not the charming kind. Rossland survived the 1890s gold rush, built a small ski resort, and somehow convinced people it was still relevant. But here's the problem. It peaked in 1897 and never got a second act. The ski resort was established over 30 years ago, and momentum has completely flatlined. There's limited new development compared to flashier resorts like Revelstoke or Sun Peaks. The local economy isn't even driven by tourism. It's dependent on the trail smelter jobs, which means when the smelter has a bad year, Rossland suffers. Infrastructure is aging. The population isn't growing. And worst of all, nobody outside of BC even remembers Rossland exists. It's got character, locals say. Translation: it's old, and nothing's changed in 20 years. You know what else has character? A 1987 Honda Civic with rust holes and a cassette deck. Doesn't mean you want to buy one. Rossland is what happens when a mountain town peaks in the 19th century and spends the next 125 years coasting on nostalgia. The skiing is fine, the town is fine, everything is just fine. And in the world of mountain real estate, fine means you're losing to every other resort with modern amenities, aggressive marketing, and actual growth potential. Picture buying a historic property in Rossland only to realize historic means expensive renovations that won't increase your resale value. You're not restoring a gem. You're pouring money into a time capsule nobody wants to open. Rossland isn't crashing as hard as some others on this list, but that's only because it never climbed high enough to fall. It's been stuck in mediocrity for decades, and the market is finally admitting it. Historic charm or money pit? You tell me. Number 8. Golden, BC. This town saw its population boom, then quietly deflate like a sad birthday balloon. Golden sits between Yoho and Glacier National Parks with the Kicking Horse Ski Resort, and for a hot minute in the early 2000s, everyone thought it was the next big thing. In 2001, over 225 people moved to Golden in a single year, the peak migration moment. Then, crickets. Post-2001 saw a steady decline in new residents. The economy is split between highway services and resort tourism, and neither is thriving. Infrastructure struggles to keep up with boom-bust cycles, meaning the town expands when times are good, then gets stuck with expensive maintenance costs when growth stalls. Reddit users joke, Golden's got 2 seasons, construction season and avalanche season. And honestly, they're not wrong. The problem with Golden is, it promised you adventure capital of Canada. What you got? A Tim Hortons, expensive lift tickets, and a town that exists primarily because it's on the way to somewhere else. The real estate market here isn't collapsing as dramatically as Fernie or Sun Peaks, but it's stagnating, which in mountain markets is almost worse. Stagnation means you're holding an asset that isn't growing while your costs keep rising. Property taxes, insurance, maintenance, all going up. Property value? Flat or declining. Picture moving here for the mountain dream, buying a house in 2015, and realizing 10 years later, your home has appreciated less than inflation. You didn't lose money on paper, but you lost opportunity cost. You could have invested anywhere else and done better. Golden isn't a disaster, it's just a disappointment. And in real estate, disappointment is the slow bleed that kills you. Would Golden's location between 2 national parks convince you despite the risks? Let me know. Number 7. Kimberley, BC. This Bavarian-themed mining town has the lowest migration rate of any BC mountain community, and honestly, that tells you everything. Kimberley tried to reinvent itself as an alpine tourist destination in 1973 when the mining industry collapsed. They built fake Bavarian architecture, added cuckoo clocks, threw in some lederhosen aesthetics, and hoped tourists would show up. Spoiler, they didn't. At least not in numbers that matter. Kimberley has the lowest absolute number of amenity migrants of any BC mountain town, under 50 people annually. Growth has remained almost flat for 2 decades. Median home prices are stagnant compared to other resort towns. The population is aging, and job opportunities outside of tourism are virtually non-existent. Local joke, we built a fake Bavarian village, and nobody came. The problem isn't that Kimberley is ugly or boring. It's that it's competing against real mountain towns with real authenticity, and a manufactured European theme doesn't cut it anymore. Tourists want genuine experiences, not a knockoff Oktoberfest in the middle of BC. Imagine spending millions on cuckoo clocks and pretend chalets and still losing to Canmore, Fernie, and Revelstoke. That's Kimberley's story in a nutshell. The real estate market here isn't crashing because it never really took off. Prices are low, but so is demand. You can buy cheap, but good luck selling when you're ready to leave. Picture a ski town where even the locals are asking, why did I move here again? That's Kimberley. It's not failing spectacularly. It's just quietly fading into irrelevance while everyone else moves on to better options. Fake Bavaria or real mistake? You decide. Number 6. Revelstoke. BC prices exploded 119%, while incomes rose just 29%, and now the crash is coming. Revelstoke has a world-class ski resort, epic backcountry terrain, and some of the best powder skiing in North America. But here's the problem. Locals have been completely priced out. The average home price hit $779,381 in 2022, up 119% since 2016. Meanwhile, median income only increased 29% in the same period. Do the math. That's unsustainable. The rental vacancy rate is critically low, core housing need is worsening despite improvement on paper, and the affordability crisis is escalating faster than the town can build new housing. A Revelstoke ski patrol worker said it best, "I save lives on the mountain, but can't afford to live within 50 kilometers of it." That's the reality. The people who make Revelstoke function, ski patrol, lift operators, restaurant staff, retail workers, can't afford to live there anymore. They're commuting from Sycamus, Golden, or living in camper vans. Revelstoke, where you can afford the season pass but not the rent. And here's the kicker. When workers can't afford to live near their jobs, businesses can't operate. Restaurants close early because they can't staff shifts. Ski hills reduce hours because they don't have enough lift operators. The entire economy starts to crumble from the bottom up. Picture this. You're working full-time at a ski resort doing backbreaking physical labor in sub-zero temperatures, and you're living in a camper van because there's literally nowhere else to go. Meanwhile, wealthy investors from Vancouver and Toronto own second homes that sit empty 10 months a year. The market is broken. Revelstoke's real estate boom was built on speculation, foreign investment, and short-term rental dreams. Now that the capital gains tax changed and interest rates spiked, those investors are bailing, and when they bail, prices collapse. Is Revelstoke's affordability crisis fixable, or is it already too late? Let me know what you think. Number 5. Fernie, BC median home prices dropped 35% in February 2025, one of the steepest single-month crashes in Canada. Let that sink in. 35% in 1 month. Fernie is a charming ski town near the Alberta border with legendary powder, a cute downtown, and a reputation as one of BC's best-kept secrets. But in early 2025, the market didn't just cool. It collapsed. New listings surged 21%. Sales dropped 27% compared to the previous year. Inventory flooded the market and buyers vanished. One seller said, "I listed in January thinking I'd get multiple offers. Instead, I got ghosted." That's not a correction, that's panic. Fernie's crash is a perfect case study in what happens when speculative markets meet economic reality. For years, Fernie attracted investors buying second homes, Airbnb properties, and vacation chalets. Prices soared, locals got priced out. Then came the capital gains tax increase in June 2024, and suddenly those investment properties weren't so profitable anymore. Owners rushed to sell before tax season. Listings piled up. Buyers waited for prices to drop further. And when buyers wait, sellers panic. And when sellers panic, prices freefall. Fernie's powder is legendary. Its property values, also powder, as in they just vanished into thin air. Picture this. You bought at the peak in 2023 thinking you'd made a smart investment. Your neighbor just sold for 35% less 2 years later. You're now underwater on your mortgage, and the market shows no signs of recovering. Do you hold and hope, or cut your losses and run? That's the nightmare Fernie owners are living right now. The town isn't going anywhere. Skiing will still be great, the beer will still be cold, and the locals will still be friendly. But the real estate market? That's in free fall, and nobody knows where the bottom is. Would you buy the dip in Fernie or wait for it to drop even further? Drop your vote below. Number 4. Whistler, BC. Even the king of Canadian ski resorts isn't immune. Condos crashed 12.4%, and the housing crisis is completely out of control. Whistler is Canada's most expensive, most famous, and most glamorous ski destination. It hosted the 2010 Winter Olympics. It attracts celebrities, billionaires, and international tourists. But behind the glitz is a brutal dystopian affordability nightmare. The median condo price in 2024 was $583 to $600, down 12.4% from $666,000 in 2023. Single-family homes, $3,569,100, down 3%. But those numbers don't tell the real story. The real story is happening in the parking lots, where workers live in camper vans because the rental vacancy rate is near 0%. The real story is cafe owners saying, "My staff sleep in vans and move every few days because there's no parking." This is Whistler's dirty secret. The real story is 400 affordable housing units under construction. which sounds great until you realize it's a drop in the bucket compared to the actual need. Whistler operates on a two-tier economy: ultra-wealthy property owners who visit a few weeks a year, and working-class staff who can't afford to live within 50 kilometers of their jobs. That model worked when housing was available and affordable. Now, it's collapsing. Whistler, where a $3.5 million chalet comes with a side of guilt because your housekeeper lives in a parking lot. And here's the scary part. If Whistler can't solve this, no Canadian mountain town can. Whistler has the money, the infrastructure, the global brand, and the political will, and it's still failing. Imagine spending $600K on a condo only to find out your ski lift operator can't afford to live within commuting distance. That's not sustainable. That's not ethical. And eventually, it's not profitable either. When workers leave, businesses close. When businesses close, tourism suffers. When tourism suffers, property values collapse. Whistler is staring down that cliff right now. Is Whistler sustainable, or is this the beginning of the end for Canada's most famous resort? You tell me. If you're still here, you now know more about Canada's mountain town collapse than 99% of Canadians. Wait till you see the final three. One lost 30% in a single year, another is literally uninsurable, and the last one, it might not come back. Let's finish this. Number 3. Big White. BC condos collapsed 22.1% and single-family homes dropped 13.7% in 1 year. That's not a market correction. That's a bloodbath. Big White is one of BC's premier ski resorts near Kelowna, and 2024 was an absolute disaster for property owners. The median condo price dropped to $413,000, down from $530,000 in 2023. Single-family homes fell to $1,510,000 from $1,750,000. That's a loss of $117,000 on condos and $240,000 on single-family homes in 12 months. One owner said, "I bought in 2022 thinking it was a safe investment. Now I'm down $120K and can't sell." Here's what happened. The capital gains tax panic triggered a mass sell-off. Owners who bought as investment properties suddenly realized their tax burden was about to skyrocket, so they all rushed to sell at the same time. Classic market panic. Listings flooded the market. Buyers stayed away, waiting for prices to drop further. And when buyers wait, sellers get desperate. Big White isn't the only resort affected, but it got hit harder than most. Forecasts predict a 5% rebound in 2025, but even if that happens, prices will still be below 2023 levels. Translation: if you bought at the peak, you're still underwater. Big White? More like big yikes. Picture this. You bought a condo in 2022 for $530,000. You were planning to rent it out on Airbnb, cover your mortgage, and build equity. Instead, you've lost $120K in value. Short-term rental regulations have tightened, and your rental income doesn't cover your costs. You're bleeding money every month, and selling means locking in a massive loss. That's the nightmare thousands of Big White owners are facing right now. The skiing is still great. The resort isn't going anywhere. But the real estate market? That's in total free fall, and nobody knows when it'll stop. Would you trust Big White's forecasted rebound or stay far, far away? Let me know. Number 2. Sun Peaks. BC single-family homes crashed 30.1%. The steepest decline of any Canadian ski resort. Let that number sink in. 30.1%. That's not a correction. That's a wipeout. Sun Peaks near Kamloops was a rising star, attracting families, retirees, and investors looking for the next Whistler. Then, 2024 happened. The median single-family home price dropped to $1,137,500, down from $1,912,500 in 2023. That's a loss of $575,000 in 1 year. Condos fell to $360,000, down 14.3% from $420,000. One local realtor said it best: "We went from bidding wars to begging buyers. It happened in 6 months." What caused this? The same factors crushing the rest of Canada's mountain towns. Capital gains tax changes triggered panic selling, interest rate fears kept buyers away, and inventory piled up faster than anyone anticipated. But Sun Peaks got hit harder because it was already overvalued. Prices climbed too high, too fast, based on speculation rather than fundamentals. When the market corrected, it corrected hard. Sun Peaks, where your property lost more value than a new car driving off the lot. Except you can't trade it in. Picture this. You bought a single-family home in 2023 for $1,912,500. You put down $400,000. Your mortgage is $1,512,500. 1 year later, your home is worth $1,337,500. You're now $175,000 underwater on your mortgage, and you've lost your entire down payment plus another $175K. If you sell, you owe the bank money. If you hold, you're stuck paying a massive mortgage on a depreciating asset. That's the nightmare Sun Peaks owners are living. The resort itself is still popular. Families still vacation there. But the real estate market? Absolutely devastated. Some investors are calling this a generational buying opportunity. Others are calling it a falling knife. Who's right? Time will tell. But one thing's certain. If you bought in 2022 or 2023, you're in serious pain right now. Is Sun Peaks a generational buying opportunity or a falling knife you should avoid? Drop your take below. Number 1. Jasper, Alberta. Over 600 homes destroyed by wildfire in 2024, and the housing crisis was already at 0% vacancy before the fire. Jasper isn't just in freefall, it's in freefall while on fire. Literally. In July 2024, the Jasper wildfire complex tore through the town, destroying over 600 homes, roughly 1/3 of the entire housing stock. The images were apocalyptic. Homes reduced to ash, entire neighborhoods wiped out, and a community evacuated with no idea when they could return. But here's the part nobody's talking about. Jasper's housing crisis wasn't caused by the wildfire, it was exposed by it. For over a decade, Jasper has operated on a 0% rental vacancy rate. Workers already lived in camper vans because there was literally nowhere else to go. Employers couldn't hire because housing didn't exist. The federal government threw $9.4 million at the problem, but rebuilding in a national park with strict zoning laws. That's a multi-year nightmare at best. Businesses are barely hanging on. 53% say they can't survive beyond 2 months without help. 26% permanently lost staff post-wildfire. One business owner said, "We've been paying uninsured wages and living expenses to our staff since the evacuation. We're bleeding money and there's no end in sight." Jasper's story reveals the fragility of tourism-dependent mountain economies. One wildfire and the entire system collapses. Housing, jobs, infrastructure, community, all gone. And the scariest part? Rebuilding might not even be possible. National park restrictions limit where and how you can build. Insurance companies are refusing to cover wildfire-prone areas. And even if homes get rebuilt, who's going to live in them? Workers can't afford Jasper. They couldn't before the fire, and they definitely can't now. Jasper didn't just lose homes, it lost its entire economic foundation. Picture a town where 1 in 4 businesses won't survive the winter, half the workforce is gone, and rebuilding could take a decade. If it happens at all, that's Jasper right now. It's not a real estate market anymore, it's a disaster zone. And the chances of full recovery? Nobody knows. Jasper might come back, or it might become a cautionary tale about what happens when tourism economies, housing crises, and climate disasters collide. Could Jasper recover, or is this the end of an era? Drop your prediction below. Whether it's a 30% price crash, a wildfire that destroyed 1/3 of a town, or a decade-long housing crisis finally exposed, every one of these towns is facing the same pressure, an economic model built on tourism, speculation, and unsustainable growth. For years, these mountain towns operated on a fantasy that wealthy investors could buy second homes, prices would keep climbing forever, and workers would somehow find a way to survive on poverty wages while serving lattes to millionaires. That fantasy is dead. Capital gains, tax changes, interest rate volatility, climate disasters, and housing crises have shattered the illusion. And when the system breaks, it doesn't break slowly. It collapses all at once. Fernie lost 35% in a month. Sun Peaks lost 30% in a year. Jasper lost everything in a day. The lesson here isn't just about real estate. It's about the limits of growth, the dangers of speculation, and the reality that mountain paradise comes with a price tag. And that price is now coming due. If this shocked you, hit subscribe right now, because next week we're covering the countries where entire housing markets are collapsing, the cities banning foreign buyers to save their economies, and the nations quietly preparing for economic meltdown. We break down the stories the mainstream media won't touch, the economic shifts happening in plain sight, and the truth behind the numbers. This is World Economics Explained. Don't get left behind. Click subscribe, hit the bell, and we'll see you in the next one.